United Health reported earnings and the stock is up over 5% on the day, sitting at $468 per share. And even though it's up 5% on the day, it's still down over 13% year to date. And I've said it before, I'm going to say it again. I still believe UNH, United Healthcare Group, is a high quality company trading at fair value. I've shared something on Twitter where earnings per share were up 38% between November 2021 to April 12 of 2024. So almost over the last 2.5 years, pretty close to 3 years. Earnings per share up 38%. PE contracted from 24 times earnings to 15.9 times earnings. And in this period, the stock price is down over 3%. And this is what happens whenever you have one-time events that could cause a lot of uncertainties. And this is what United Health has experienced. And I believe this is temporary and the market will eventually, look after it. So I decided to do a very quick video to review UNH's earnings and update you on my upside potential and why I believe United Health is undervalued. I've talked about it a lot on Twitter. I got a lot of pushback about interest rates, about why I believe it's undervalued. I tried to explain this so many times, but I'm explaining it one more time here in the video. Now, for the last earnings, they were not bad at all. They actually beat on earnings per share, adjusted, which I'm going to talk about. 716 versus 661, pretty decent beat, a massive beat actually, and they also beat on revenues, which was amazing. But adjusted is a tricky one because they experienced a $7 billion loss or charge, you could say, from selling their Brazil operations, mainly due to currency fluctuations and many different things. They paid out $7 billion in terms of a charge. They had a cyber attack, which we know about. Cyber attack also contributed to them losing more money. So in total, if you do not adjust these figures, UNH had a net loss of 1.4 billion. They didn't even make net income. They had a net loss of 1.4 billion versus net income of 5.6 billion during the same quarter for 2023. So they actually had a net loss instead of a net positive income. But it was mainly one-time expenses. The cyber attacks, they're not going to have a cyber attack every quarter. I hope they're going to work on it. It's not going to happen again. So this is a one-time issue. Same thing with their Brazil, selling their Brazil stuff, one-time issue, and they maintain their guidance. So I don't really see anything crazy with them adjusting for these expenses, but using the adjusted expenses, looking at the core business itself, they did amazingly well on earnings per share, and they also did amazingly well on revenues, and they kept guidance, which is very, very important. Now, you might have heard of the whole antitrust investigation of UNH, and a lot of people were very worried about it. But we have to think about it a little bit, is that most companies are experiencing this lawsuit right now. Amazon has the same exact thing. I believe Apple also has an antitrust lawsuit, and UNH has one, CVS has one, I think Cigna also has one, and many different companies are getting just hit with these antitrust investigation issues. And the way I think about it is, yes, they might be fined something, but maybe they're trying to break them apart. Because the whole argument with United Healthcare is that United Healthcare is pretty much a monopoly because they own United Health, which is the insurance business, and they own Optum. Optum is more of the services business, a lot of the primary care, in-home health services, technology stuff, pharmacy care services with Optum Rx, Optum Insight, Optum Health. So Optum in general does the services, and United Healthcare has the insurance business, and it's being accused of being a monopoly. So the way I think about it, that the worst case scenario, maybe they're gonna split them up. So they're gonna split Optum and United Healthcare. I'm not saying it will happen, but this is what I think is the most likely setup if this lawsuit really goes through, and which rarely happens, but it might happen. But in the case of Optum being split up, I mean, I've said it before, I'm going to say it again. Optum by itself is going to be valued at a much higher multiple than United Healthcare. Optum has very decent margins, and it has massive growth, over 16% growth over the last year. And in the one before, they grew, I think, 32 or 33% in the quarter. They have a massive backlog. I could look at the backlog. I think it's pretty close to $33 billion in terms of backlog. This is an amazing, amazing company. But I have to say, I'm getting a little bit concerned with their operating margins. They went from 7.7%, 6.9%. Now it's 6.4% adjusted. If it wasn't adjusted, it would have been 5.8%. So this is declining margins. I don't like it at all, but the growth is still there and margins are still healthy. So I believe Optum by itself will likely be valued at a much higher multiple than is it being included in United Healthcare Group. So I'm not really seeing this lawsuit being a major issue unless they get fined something crazy and something massive happens. This, of course, could always happen, but I'm just not seeing it. So this is why I'm not taking this lawsuit with a lot of caution. I normally do, but I'm just not seeing how it's really going to affect United Healthcare. It's still an amazing company, massive return on capital, around 19% return on capital for a company that has never had a negative revenue year. It was able to grow revenues every single year since 2002. It never had a negative year. Pretty amazing stuff. And it's expected to continue on this trend up to 2027. I mean, pretty amazing. And this company has been expensive for a while, but it's no longer as expensive as it used to be. Maybe it is somewhat expensive to a lot of you, but if you look at this chart, it's now sitting around 16 times forward earnings. Now, the mean was 18.5. It traded as high as 25 times and as low as pretty close to 12 times. Now, the main argument I got is you're looking at United Healthcare being at 16 times earnings, and you're saying that this is undervalued because the mean was 18.5. But whenever we had 18.5, we had 2% interest rates or 0% interest rates. Now we have 5.5% interest rates. So 16 times might not be as cheap as it is if you compare it to 18.5 times with 5% interest rates. It just doesn't make sense. And whoever is claiming that is absolutely correct. And I'm not counting a multiple expansion with United Healthcare. But I just have to say something that this is the wrong way to think about it because the market is forward looking. So unless every single investor strongly believes that we're going to have 5% interest rates forever, then yes, 16 times earnings is the base or the best case scenario for United Healthcare, and it's not going anywhere above it. But I think most people in the market is forward looking, and people know that 5% interest rates are not going to be here forever. They might be here for another few months. They might be here for another year. They might be here for another 2 years. But the market knows that eventually rates are going to come down because Powell himself said the neutral rate is 2.5%. So we're not going to have 5% interest rates forever, which is why this whole analogy doesn't really make sense. But let's assume that United Healthcare stays at 16 times earnings, does not get a multiple expansion, doesn't get anything. In this case, I would expect the returns of United Healthcare stock to mirror its earnings per share growth. And the average earnings per share between 2018, you could look at it to 2024, and even after that, it's expected to be on average around 13%. We had years of 13%, 15%, 17%, 12%, 13, 17. So it's mainly average around 13%. So I would expect around a 13% annual return for something like UNH. Now, if we do have lower rates in the future, or we do have a pullback in the market, because once we have a massive rally in a lot of the tech names, it becomes a risk-on rally. People buy Nvidia, people buy MSCI, people buy Tesla, people buy a lot of risk-on stuff. Maybe not Tesla right now, but a lot of risk-on exciting investments. But whenever we have a risk-off rally or risk-off just environment in general, like in 2022, a lot of the pharmaceuticals have actually outperformed. Some stocks did go down, but whenever you have a risk-off rally or some kind of a pullback, a lot of investors tend to rotate into safety stocks. And a lot of these safety stocks are stocks like UNH with a high moat, with something that's not cyclical, recession resistant, and very predictable business model with pricing power too. You could say that if you want for United Healthcare. So if it does experience a multiple expansion from 16 times back to 18.5 times for the mean, I'm not saying 25, but if it does go to 18.5, then you're looking at something pretty close to a 15% annual return or a double every 5 years with an amazing company, high quality company, a large cap stock, which is unusual to get such returns with this size, with a company like United Healthcare. So this is why I believe United Healthcare is still a good investment, even though it went up 5% or 4%, and it could be up more whenever I release this video. But I mean, as long as it's not sitting, above $500 per share, I think United Healthcare is fairly valued, especially if it's below 480. I think it's fairly valued, unless something crazy happens with the lawsuit or they get hit with another cyber attack. I can't predict it, but I think the stock is undervalued. It's not financial advice, just my opinion on United Healthcare. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.